All right, good evening, everybody. Welcome to the Boston IBD Meetup. I'm your host, John Pokarova. I'm the leader of the Boston IBD Meetup. Um, for those of you that are new members to the meetup, welcome. And I can see from the chat, we have a lot of people that attend every single month, so welcome back as well. I have a couple housekeeping things to go over. And then we have a wonderful speaker tonight and a very, very special topic. So I think there's a lot of interest in the topic. You know, we're not going to talk about indicators all night, but we're going to talk about something related to the markets. So I think it's going to be an interesting, fresh topic. The recordings of the webinar tonight, we'll email those out to everybody who registered for the event. I'll get that out. If not tonight, it'll be tomorrow. The chat is open, so you can all chat with each other. And then if you have a formal question you want to make along the way, the Q&A panel is open as well. And you can send that in and I'll monitor that. And if appropriate, I'll interject into the presentation if it makes sense. If you have any ideas for topics or speakers for the Boston IBD Meetup, please send me an email. You can email me at rainkingbbullbear@gmail.com. I also have a YouTube page there with a lot of content there and a new website that I encourage you to check out. Now, just want to go over our speakers. We've got a great list for the next almost 6 months here. Last month we had Roy and Wes Maddox. They did an awesome job on becoming better sellers of stocks. We've got Scott Land with us today, and I'll introduce him formally in just a moment. Next month, on April 8th, we'll have Matt Caruso. I've been talking to Matt, and we're going to have something related to his professional, I'll say professional knowledge and expertise and how it can help retail traders, things we can do based on some of the knowledge that he has. So we'll have Matt next month. That'll be great. Dr. Wish, I see here, is in the audience tonight. He'll be speaking in May with a really interesting super fast stochastic indicator. Mike Kincaid of the Boston Meetup will join us in June. We don't have a date for that yet, but he'll be talking about growth stocks. Don Vandenborg will be with us in July. We'll talk about position sizing, volatility, ATRs. And then Michael Lamoth has a new book called The Trading Mind Wheel. We'll have him in August. So we've got a big, nice slate of speakers coming up, and we appreciate everybody spending time with us tonight. So let me get to introducing Scott Land 1. Now, Scott is a very seasoned growth stock trader. He's been trading a long time. He's got a really, really strong Twitter following, and it's because he's given great market insights. He shares tips. He shares some setups, etc. He's been very generous with sharing his knowledge of the markets. Tonight is really what he calls his passion project. And that's really his efforts to work with his middle school son and getting him, activated in a way to navigate the markets. And he's going to have a bunch of things in his presentation that might be some nuggets that you could take away too, to give you a little bit of a roadmap if you have a son or daughter that maybe you're trying to get engaged somehow in the markets and build your relationship with your child. Now, Scott has a Substack blog, and I know many of you like Substack. So he's got his own Substack blog, and he's been writing about teaching his son trading stocks in a really interesting way. It's called The Speculator's Journal. So I would definitely, if you're interested in that Substack, check that out. And you can get some of the narrative behind the individual, chapters you'd call them. But it's really interesting. So with that introduction, I want to turn it over to Scott Land.
All right. Well, thank you for the introduction and having me on there. Obviously, there's a great list of speakers upcoming. I've attended some of these as an audience member in the past and have been always very impressed by the breadth of knowledge that people have, and as well as your YouTube channel. That it's always a great on the market updates and kind of where we're at. Like you said, this is very much a passion project for me. So in some ways, it's interesting because we're just getting started. I can't say I've raised a successful trader that's now trading at some hedge fund or not, but we're still kind of in that early growth speed. But with that further ado, I'll get into my presentation here. Let me see if I can share it. There it is. Does that worked? You guys?
Yep, I see it on the screen, and I'm going to shut off my video and won't have any chance of blocking anything and let you roll.
All right, should I shut off mine too? You mentioned.
I would think so. Yeah, just do that to be safe.
All right, let me block that. All right, now I'm off. Oh, I'm back on. All right, so my topic is what I learned teaching my son to trade. Okay, we advancing here? There we go.
Yes.
Okay, now we're working. So this is very much, I guess, as you said, a passion project. I've always been very passionate about the markets, and I've wanted to share that with my son as he's come up, to an age where he can start appreciating some of the aspects of the market. Whether that's psychology, whether that's understanding how businesses work, how stocks might move, or how to prepare yourself for the future for financial, I guess, hopefully independence. I'd like to get the kid out of my basement by some point, right? As we would all. So I guess what we started a Substack that we'll talk about it along the way, but that this is kind of our journey. Started some of the things that we've been doing. So first, here's my agenda for my presentation. I'll give kind of an introduction to who I am, and who my son is, kind of what our strengths, our weaknesses, in proceeding and learning. My son has ADD, which that is his own challenges, because we'll be trying to look at a chart and he'll eventually just run over to the piano and to go some different direction. And if you're a parent to that as a kid with ADD, you can probably relate. We'll talk about some of the places where we began, some of the conversations that we've had, and then how to transfer concepts from the market. I believe you need to meet kids at their level and of their interest level. We can talk about some of the very complicated things that some of these companies like Peloton might do, but that's not going to be relatable to a kid. Frankly, I can't explain what Peloton does, and I would imagine a lot of half the investors that own the stock can't explain what it does either. But that may be a thing that if a kid gets super interested in a certain type of sector or something, then you take their interest to that level. We'll talk about some of the practical first steps. Where do we start? With like such as paper trading and the like. I have some resources that I know kids are using through some of the classrooms. There's a website called the Stock Market Game that some schools are using. I think my son's school has used that at various points to kind of as a stock market simulator, but as a resource. And then, eventually, how do we start looking at getting an edge? How do we look at, keeping a journal? How do we get better? As well as, eventually we get into trading real money and avoiding traps and all the Twitter method. If anyone's on Twitter, it's been ridiculous with all the bots that, if you follow such and such, you'll make $123,000 after following their 6 picks, right? But how to avoid that, because those at their core, those type of scams are targeting people that don't have a lot of knowledge, or might be young, or might be new to the game, that might not know better, or might be desperate. So about me, I started trading in college, and I very distinctly remember there was I think it was like a Dateline or a 60 Minutes expose on the day trader, and I thought they're showing these guys that were sitting in chairs playing essentially a video game, and walking away with thousands of dollars every day. And it sounded pretty good as somebody that was working in a coffee shop at the time, and started learning about that, getting into at the time. Yahoo had a bunch of chat rooms and trading chat rooms, and started, learning about that, and became very passionate. And I guess it's pretty easy to get passionate about the market when you're in the middle of a bubble, and it's very easy to make money. At the time, my strategy was essentially buy these stocks that were making new highs, and they would almost always gap up, and it was crazy. 2020 had, I guess, reminiscence of that, but it was never like, there's been nothing like, the dot-com bubble where you buy a stock 30, the next day it was up 30%. It was day after day. So I became very passionate about that, and eventually got a job out of college at the Chicago Board of Options Exchange. It was a kind of a market maker type position where you were kind of a prop trader on the floor trading the accounts. But what happened, we had 9/11 and we had the dot-com bubble burst, and it became a less desirable place to hang out and trade there, where you were seeing people that had been spent their whole working careers there getting laid off and not really having any prospects. So I kind of thought maybe trading is all it's made out to be at that time, and going, kind of as people do, got a non-trading job, started a family. Worked on, built it a career. Actually, one thing about my name, Scott, that I've always used, Scotland, it's because I had my first, I had a real estate purchase. I bought a couple of duplexes on Scott Street, so it became Scotland for the for my LLC that I had. But so that's where the name comes. But is eventually trading is a very jealous mistress, and everyone that has gotten in the game, you can step away for a long time, but it'll eventually drag you in if you're passionate about it. And I came back and I'm thinking, well, let's try to learn how to trade again. And one of the things that I realized very quickly is what worked when I was trading my own account in the dot-com era didn't work anymore. Eventually breakouts were getting faded. Um, it was impossible to make money trading like I had used to. And so I kind of went through I've heard people talk about this as kind of the wilderness, or the jungle period, where you spend a lot of time going through different methods. You don't have a clear understanding of what's going to work for you. And ultimately, I think to be a successful trader, you have to find this trading style that meets your personality, whether you're a quant, whether you're a day trader, whether you're a position trader or swing trader. It has to be aligned with what you are. And until you try a little bit of the style drift, per se, you don't really know that. Well, eventually what found out working for me was trading growth stocks, finding alternative, I guess, non-traditional entries at supply and demand, and being able to hold those and being successful. I guess, and if you follow me on Twitter, you've seen kind of what my stereotypical stock might be and where I'm buying. It's not, I'm not keen on the original, traditional breakouts, but they're, I guess, alternative buy points within the bases of those stocks, or maybe it's an earnings gap up, and I've got, various methods that I trade with to, figure that out. Like I said, my influences, I guess, if everyone asks you what kind of trader you are, I guess, and I saw kind of along the lines of what Jesse Livermore said, I'm more of an opportunist. Like the term speculator, as opposed to I'm a trader, where at the options exchange you had to trade volume, you had to trade you wanted to trade as much as possible. That's the only way that market makers are making money. The great thing about being a swing trader or a growth investor is when the growth's not there, you can step away from the market if the opportunity's not there. Like most of you, I've been influenced by O'Neill and Livermore. I love the historical aspect and how relatable a lot of these stories are from a long time ago, and how the markets really don't change, just the names and players their names changes, but the game is always the same. Um, I guess I kind of honed my craft through a website called StockBee. And there was what I appreciated about that site is it more or less systemized the process, and we were looking for expansions, contractions, breakouts, but they weren't necessarily a true breakout, but they could be. But it was, the volatility contracts, and you have these very tight periods where you can take an entry and then you have these expansion periods, which was a lot of what I do now, maybe on different time frames, but at its core, I'm looking for these contraction points or points where there is, I guess, support or resistance. I call those pivots. Icarus levels, where if it goes above the pivot, can't hold, the wax melts. You see the wax in the candlestick, and it falls, and then Atlas holds it up. Trading mostly growth stocks, like I mentioned, this is an interesting environment, as most of you have seen in the last couple of weeks, if not months, where the growth stocks don't really do well. So you see people kind of migrating over. Are we going to try commodities, gold, and what out? And then I've got a few setups so that I've developed over the last couple decades of trading. And they work pretty well for me. They work well for some other people. And I'm happy to kind of to share all those things. But so I guess I got this, kind of expansive, I guess, experience in the markets, trading it, finding my own path in it. So how do you take that and take to the next generation? Because it's a passion of yours that you want to be able to share with your kids. And some people are passionate about sports. They want to share their love of the game with that. And well, stocks is kind of my sports in a lot of ways, that I like. So this is my son. My original thought for this presentation was we could do this together, but he's a little shy, as you can see. So he's looking good though. But he's an eighth grader. He's very intelligent. He's really into science. He's done like robot competitions, into video games, Lego, computers, drawing, piano. He's got an entrepreneurial streak, which is really cool. They love going out, making the lemonade stands, or when we have a snow, I guess cancellation, they'll take their shovels and knock on doors and try to make some money from neighbors and stuff, trying to shovel sidewalks and the like. But he's got his challenges with ADD, which it makes it very hard for him to stay focused on things that he's not totally involved in. If he's totally interested in, he can stay within that. So this is where we're coming in, and the levels that I'm going to try to reach my son at, and share my passion with him. So I think with every lesson or moment, there's kind of a spark where it's kind of the right time to teach your kid, or to start having these conversations. And my son once asked me, Dad, well, how do you make money on the computer? I see you in your chair looking at charts, clickety clack, going through them. How do you do that? Well, and that kind of led us to this, some interesting discussions where we're able to talk about what the stock market is, and why it moves, and those type of things. And so that has led, I kind of wanted to let's have a project that him and I could do together. So we called it, our Scotland and Son. I've had this Substack, this Speculators Journal, for a while, and not really sure, what exactly I wanted to do with it. I don't want to just have another newsletter out where it's, such and such started having earnings this week, and there's thousands of those type of setups that, or newsletters and stuff that people do a very good job. And so I wanted to have something that this is for my son and I to kind of document, or, talk about our conversations, because people find those interesting, that our readers that have looked at it. But I also wanted that he could participate in, and look at kind of the readership and see how it's growing, and get those kind of wins, under his belt, so he can learn and, kind of get that positive feedback of people reading and, asking questions and, and seeing how it's relatable to what him and I are doing. So I guess at a core, why do we want to teach our kids how to be traders or investors? And for me, these were my reasons. But I wanted first and foremost was this, being able to have a bonding project with my son. Develop, and then I'd like to, hopefully he develops these interests in life skills and, get some financial literacy. So he's not moving into my basement or not out of my basement, by the time after he graduates college. And he's able to do some kind of this strategic long-term planning. To be a good investor, you have to kind of look what companies are doing, how they are managing, or you're managing your money. And those skills are so important. Whether you're studying the companies, learn how to do the research, but as well as, making sure you're not losing all your market with stupid bets, zero DTE options and the like. So kind of that's kind of was my background with as far as why we wanted to do it. And maybe my father and son, maybe my selfish goal was that to have this time that I wanted him to understand that money is a tool. There's a lot of families that don't talk about money. It's my wife grew up in a kind of a family like that, where it was a topic that was considered taboo. But kind of understanding that you want to be able to be open up about topics that why is money important to talk about, and how can we use it? It's not just about what you can spend, but how do you grow that and be able to take care of yourself. Again, with the financial literacy, now our state is one that has a core. It's a required course at the high school. My son hasn't taken it yet. He will next year, but overall, there's just this tremendous lack of financial literacy in the United States, where only 23 schools have a personal finance course. I would imagine that our credit card debt, if you've ever seen this, the stats as a nation, it's never been higher. We're debt ridden, and most people don't understand where I guess the basic finances, what the impact of interest rates. We always do the buy now, pay later. And, you see some of these memes that are, or I don't even know if they're memes, but where people have bought this, a used car, and they're paying like, 20 times over the cost of the car over the life of it, just because of not understanding the interest rates and making these poor financial decisions, which, ultimately dooms them to a life of struggle. I think there's also this fostering responsibility and ownership. I mean, even giving control of even a small portfolio, it gives this sense of accountability. There's so many lessons that you can learn from making a bad trade. If you make a bad trade, do you need a lecture? It's a bad trade. If you broke a rule, you know it when you're doing it. And I think the market kind of gives that feedback without on its own. There's so many other places in society where if you make a mistake, you get yelled at, or you get the teacher, or you don't even get the accountability at all, which is has its own issues. But I think getting that instant feedback from the market, and you learn to own your decisions and accept the consequences. And honestly, this is one of the things that I see a lot of new traders struggling. They always blame, the market, or the market maker, or Trump tweeted, or Greenspan. I mean, frankly, Greenspan did something, back in the internet era, or or Powell's going to do something, and it's always somebody else's fault. Short reports, or until you accept the consequences and potential risk and rewards, you can't move on that. And So I want my son to learn that, as soon as possible and early, and it's kind of a form as a bedrock of the process. And you can boost your confidence and independence. I think successfully picking a stock, seeing it rise is awesome. It's a great feeling. I think there's probably a reason why we're all so interested in stocks. It's if we were gluttons for punishment where nothing ever worked and we never beat a mutual fund or we never beat the market, who would do this, right? But it's the thrill of finding a stock and seeing that make multiples of your money is such a cool thing. And I'm hopeful that the confidence, and I'm hopeful we can actually pick out some good stocks, obviously with the market a little bit choppy, if not just outright awful. We're not picking stocks right now, but kind of just building up watch lists and such. But we want to get some confidence that you can say, hey, I can do this. And once you realize that you can be successful in this, it'll work its way into other areas of life. And and I think and this is maybe it's a philosophical thing, but I want my kids to think entrepreneurial. It's one thing that you can go get a job and as people tend to do, but understanding that ultimately freedom and it comes from being able to be able to make your own money. And I think there's something that my wife and I are certainly encouraging our kids to to think like that. We've started a couple businesses and I think there's freedom, but there's also a lot of there's a lot of things that come with it. But I think on the whole, it's something that we are certainly encouraging our kids to be thinking, entrepreneurial. And I think by studying the market, by studying businesses, that's kind of a natural step to foster that skill. And here's one of my favorite photos of my kids. My son, I mentioned he's entrepreneurial. And he made a sister sell lemonade while he put on his Halloween costume, and we had a shark. They were selling, photos of selfies of cups of with lemonade, and they've done really well with that. So a few things are working. And then ultimately, we want our kids to be able to, build wealth. As Einstein has said, the most powerful force in the universe is compound interest. And Ben Franklin, the money that earns money, or the money that money earns money. In other words, you can make money on top of your money, and eventually you're not working for your money's working for you. And that, I think, that goes along with kind of all the entrepreneurial stuff that we've been talking about. But going to this process, I've also realized that there are potential risks, right? If it doesn't go very well, this is the biggest risk. If he blames me for losing money or something goes bad, there's a potential risk of, with the relationship. He could get scared off investing. He could get, caught up with, if he's doing his research on Twitter, or I don't know where else get people to research, maybe Reddit, but the ladies in Lambos that, all the gurus try to throw out there, that how easy it is with the day trading. And one of my, concerns is if we're getting our kids into trading, and this is something I've made a conscious decision when we're looking at stocks. We're not looking necessarily at the stocks that are very speculative that might just pop up, because I don't want to hand my kid the keys to a gambling addiction, right? And also there's a risk that it may be a demotivator for other pursuits. And as interesting as stock trading is, or the markets are, I don't want this to be the sole focus of my my middle school kid. I want him to have a full high school life going forward, doing all those things, and not just focusing all his energy on the market, but having enough exposure that he's becoming aware with it generally, without it overtaking the things that he probably should be into at this age. So I guess kind of with that plan, my kind of framework is I'm going to encourage curiosity, try to make it fun, and approach it on his terms and with his interest. And I'm not going to force it. There's times where it was clear that he was not interested in sitting down and working on or talking for another blog post or whatever. And if he's not ready to, talk about the market or, concepts along those lines, it's, I'm not going to, to force it. He'll just gradually introduce those and take it one step at a time. And rather than try to say, we're going to do this in practice, chart reading day in and day out. So that's kind of where I'm looking, kind of this overall, I guess, goals or objectives on how I'm going to, teach my son here. So I guess the first lesson I've learned in teaching my son is the importance of simplifying complex concepts in learning. We want to break down, like, there's some really advanced complex, concepts, and I know you've had speakers, talk about all sorts of indicators and everything, and but how do we break that down to something that's really relatable to kids, where they're not going to understand what an RSI is or a stochastic or a Fibonacci? We need to take it to the level that they're at and then gradually build up. So I want to, say, like, let's start with a basic question. What are markets? Okay. Now, when I hear the market, I have a very, clear picture of, the stocks on my screen lighting up and making charts and stuff. But, for the average kid, they're doing, thinking, well, what about tennis shoes, or the Lego, and, like the stuff that, there's a value in collectibles, and and the understand, and this is where I've taught, kind of the concept of what are the markets? Why do we have a market? Um, people need to buy or sell various things. So one of the things that I think this led to a really interesting discussion, is take the markets that of your kids' interest. Now, my son is really into Lego, as I mentioned, and there's all these minifigs, and he's got all these books about the production of certain minifigures and why they're, and how many are made and all that kind of stuff. So rather than really, brushing that aside and say, no, I want to study this, we should study the stock market. Let's talk about, let's take the concept of the market and let's talk about your kid's interest level. So he's in the minifigures. Well, let's go look at what the minifigure market is. So we pop on eBay, and we talk about why there's sellers, there's buyers, and how do we we look at some things. Why are there more value for certainly minifigures than other ones? What are the things that might come into the value? So first off, you might want to see what is kind of the trading range, right? So let's take our Darth Vader, right? So we go on eBay, and you want to click on the completed auctions, because that'll show you what things have actually sold for the printed price. And you can see, look, there's a trading range between $11 and nearly $14. Okay, that gives us kind of a range of what the market will bear. And you can see that now, and you can take that concept to a stock chart and say, okay, here's Amazon stock. See how, from this period it was trading, between this range. This is just like, the Lego. Sometimes, just because, there is no one set price. Somebody would be willing to buy Darth Vader at $11, and some might pay $14. And it's just like Amazon. It's what they need to buy when they need to buy it. But then we can even take that on and say, well, how do we develop an edge? Okay, right now my son has got all these great books about these minifigures, and why there's certain characteristics that make one more valuable. That if I were looking at, see, this Darth Vader looks exactly like the other ones, and we could go back and say, they all have lightsabers. They all look the same, but this one apparently is worth $51. Now, that's a subtle difference that the average person doesn't see. If I were to have to sell that one, I would probably price it within the price range. But an edge is something that my son might see that the average person wouldn't. So we can teach, kind of that concept of introducing what an edge is and why that's valuable. And then we could kind of take it from that market. Well, let's see what is supply and demand, right? Now we've got this Boba Fett that had 35 bids on it that sold for, nearly $1,500. Okay, so how can we relate, that? It seems to indicate that why is that price so much more than the Darth Vaders, right? Well, my son draws a conclusion, well, it must be much more in demand than the supply. And then you can introduce the concepts of, for example, what if I had to sell 100, and what would be the best way to do that? If I sold them all on market, what's going to happen to the price? Maybe Jeff Bezos might sell, have to unload a few million shares. What happens to Amazon's price? We all, we see that happen, and the price falls. But I suspect if somebody dumped the Boba Fett's on the market all at the same time, the price would go down, pretty substantially. So understanding these kind of concepts of where where the demand is, where the supply is, and what would happen if there's more demand or more supply, can show a relatable price to the areas where my son is, probably more interested in, the minifigure or Lego market than, the stock market would be. And the concept that I'm trying to teach him from this is, to make money consistently, you need to have an edge. So if you were dependent on the Lego market to make a living, you need to be able to have, your ability to buy lower than you can sell at, or sell and then buy lower. And that can lead us to a conversation about, well, what are the types of edges? Okay. Now, there's an edge of the technical aspects of the market. We can look at the frequencies of sales when they sell and how big the market is. That may be, we can see that, certain months, coming into Christmas, maybe more Darth Vaders are going to sell. So if you can buy them in March, hold them, and sell them in November when people are having Christmas, maybe you can develop a little bit of an edge there. Understanding how big the market is going to tell you, it's going to tell you how liquid it is, how, if you can sell it, how, if you've only got, one buyer out there, maybe you don't want to, bet your year on that. And then you can figure out, what are some of the variations. I was also able to introduce the edge of, okay, what about this lead information or inside information? If you know that, Bob from the Lego store brick company is closing, and he's going to dump thousands of his Darth Vaders on the minifigure, you certainly don't want to be buying now. That's you get concept with the price, that it's gonna drop because we know that there's more supply. Or if conversely, if Lego's gonna discontinue a set, what's going to happen if they tomorrow they stop selling all Star Wars sets? Well, the prices would probably go up. So that's the type of information that you can learn that, in the stock market, it's probably illegal unless you're in Congress, but it's an edge nonetheless. And it's important to teach the kids that, there are various types of edge. It may be just macro, understanding if a new movie is coming out, that may affect the market. If there's going to be a shortage in plastics, that may be, a macro edge and the like. But I guess the main, lesson on this was understanding the where your kids are and being able to explain market concepts to the markets that they care about more and appreciate, because you can then turn it on to towards the stock market. So we have the teaching someone with a short attention span like my son, I needed to be a little bit more creative, and I can't just hand him William O'Neill's How to Make Money in Stocks and expect that he's going to get everything. I needed to take things a little bit more creative than where I've seen elsewhere, at least. So with that, we take some of the concepts. Okay, so now we have a stock can be like a Lego guy, right? That you've got, but if you think of it at its core, what really is a stock? I know we can give you the textbook definition that it's this fractional share of ownership. But philosophically, why would I want this piece of paper? We're assuming that it has value to someone or will have value to the future. And then that at least starts leading, once you start having those conversations, why would you want to have a stock? Who might own the stock, and what are the motivations? Once you kind of understand, what are the motivations are, you can start saying, okay, what does this look like at a stock chart? If everyone needs to sell, what does that look like on a chart? Um, why do they trade? At its core, you need to have a buyer or a sale. You need to have somewhat of a difference of opinion. Somebody one needs to get in, someone needs to get out. They might have a different opinion on value, and but ultimately, stocks fluctuate between supply and demand to reflect those differences. This next, then we talk about who are the players. Now we can take this a little back to the Lego market. There may be specialty shops that want to have, they might want to stock a lot of these obscure pieces, or maybe they know that there's a lot of what the value, what they can sell it as. And just explain to your kids, whatever your market is that they're into, kind of get them to push out what are the different people. Maybe there's collectors, maybe there's people that think they can make a quick buck. And then once they've articulated what the people they think are participating in that market, we can start talking about who are the players in the stock market. We have the insiders that they're the people that initially when you IPO, they want to put a block of stock on the open to raise capital, and or they're holding stock because they are the CEO. They've gotten introduced to as part of their compensation plan or whatever. They get options, and then they can own stock, and they may know things, and that's why there's a value. There can be an edge, which is why people track insider buying and selling. Then we have the big funds. Kind of you tell your kids about what are the funds, like a mutual fund, ETF funds, how they work and why they might be buying stocks. Maybe they are a hedge fund that thinks there's an alpha or an edge in a certain company, that they want to own some value, or maybe it's just a passive fund that it's just going to buy, because the company's in the S&P, it's going to have to buy it, shares in percentage of that just to match that. And we have the retail investors, which are probably going to be your collectors in whether shoes or Lego or whatever it is. Then there's the traders that try to make a money on this fluctuations, the market makers who fill the gap, and then we have I guess the pure gamblers. And there's probably those in every market, they think that something's going to either go up or down, and they're willing to take that without really having an edge. But I guess the concept that I wanted my son to learn is that each of these might have different motivations, and each might operate on different time frames, and that's going to be reflected in their charts or the markets. And you give a basic of the kind of what are the types of things that are traded, stocks, futures, index, ETFs, mutual funds, options. I didn't include commodities on the list, but that can be kind of a fun one too. When the kids find out that you can actually buy orange juice on the futures contracts, or cocoa, or gold, oil, and the like. Would I recommend your kid trading that? Probably not. But just knowing that there's a market for that type of stuff as well. So I guess the third lesson that I've learned, and is the advantage of starting with small, with relatable examples. Start with paper trail, and the goal is to build some confidence before trying to move in real money. I think it would have been, particularly when I started, or with my son, if we open up real cash and we, had positions, we would have gotten blown out in the last, month or so. And so you don't really want to, I guess, dive into the deep end before you have have built up a kind of a strong foundation. And I think there's certainly an advantage of paper trading, for that. So, if we try to teach everything in the market or every concept, we're not going to be able to do that. We're going to overwhelm the kids. So I think there's certainly a value of kind of breaking that down and trying to break down the concepts and teach them kind of small building blocks. And this is one of my favorites. If you've followed my blog, or other talks that I've given, I talked about how Weinstein's kind of stage analysis, kind of I see it as kind of a skeleton on which every trading system that I've worked on is built on, right? It's this framework of how stocks move from stage 1 to stage 2 to stage 3 to stage 4. So we had a great discussion about, well, why is a stock, what happens and what's happening in stage 1? It's people, they are, it's not really interested, it's not under demand. Maybe it's like the Darth Vader market because they're all just trading between a couple, a dollar or two, right? They're just fluctuating in and out. But then eventually, maybe something happens and it goes into this markup phase where prices start appreciating, and then it finds an equilibrium at stage 3, and eventually the sellers take control and it goes to stage 4, and we start the process, over again. So I think that's a pretty easy concept for kids to understand. It's kind of like the 4 seasons. You have spring, summer, fall, winter. And it kind of makes intuitive sense, particularly if you show examples on charts, kind of where they're at, and say, well, where do you want to buy stocks? Do you really want to buy, and that's always a question. If you take a look, any stock you mention or you talk about, first question is, what stage are you in? You certainly don't want to be buying, stage 4. You don't want to be buying, stage 1. You want to be, close to that, the breakouts in stage 2. So, now we can talk about, timing the stage for teaching. And this is something that you probably noticed if you're following my Substack, is that there hasn't been an update for a while. And that's intentional, right? I'm not going to, I think it's hard to teach in a bear market. And if you're a Bears fan, you get it. I am. But it's depressing watching a bear market, and the stocks keep going down, and I think if you're losing money, or the stocks that you're watching are losing money, you're going to lose interest. Now, that's not to say that bear markets don't have their own lessons, because they certainly do. You can learn a lot from bear markets, but I think they're most valuable only after people have been successful in trading. They found some success, and then you can say, okay, now we're going to the bear market. Now let's talk about how we're going to preserve the gains we've made in the bull markets. And there's a reason why I put the M in a big bold font here in for Kanslem, and that's because it's probably the most important criteria. It's the market. It's 75% of the stock's movement is tied to the broader market. So what does this teach us about teaching our children? If you got to give them a chance to win, you got to give the easy wins. Losing money quickly means quickly losing interest in investing. So that's why our Substack hasn't been updated since the market has sold off. That has been intentional, and if we find some bottoms, then we'll start probably posting a little bit more. But you have to teach your kids when it's right for teaching. Probably you don't want to teach them math during summer vacation either, but there are certainly times. So the next thing I want to understand, or my son to understand, is the role of psychology in trading. Stocks run from fear to greed, and how do we do we show that? Because the same numbers in one type of market environment can lead to ups, and the same numbers in bear markets can lead to stocks selling off. So understanding that type of thing is, where's supply, where's demand, and how not only how stocks move, but also how the impact that that has on your own emotions. Um, is something. So I've played this, we'll play these kind of scenarios, we call it, up or down. If a new product's announced, the first, things I asked my kid, well, what do you think's going to happen? Okay. And so he thought about it and he said, well, a new product that's probably people are probably excited. So they want to buy the stock. And said, yeah, I would agree with that. Some new, a new cool Apple product might lead people, to thinking that there's um, something that they can make money on and invest in the stock, and they want to be participate in that. Now, it's like best earnings in company history, right? Well, that's an easy up. But then I said, well, what if they were less than expected, right? Because what you'll see this all the time, and from new investors, well, this is the best this company's ever done. Why is the stock selling off when their earnings are so great? But it really comes down to these expectations that people or analysts might have on a particular um, stock or an earnings. So it's important to say that it's not just how good the earnings were. It's also about what was the expectations for the earnings? What was the surprise? And frankly, what are they going to be expected to do going forward? Conversely, you can have huge losses, but a company, predicted a turnaround. That may, even though they might lose on a particular quarter, if they're saying, well, next quarter, look, we're got orders coming through, we're going to turn to profitability, people might buy that, even though the earnings in the instant quarter are negative. So, teaching your children that, just because it's, there are other factors that weigh into this that are, beyond the traditional good or bad that might weigh at a stock yeah, bears into it. I guess by anecdote, my own experience in investing, I remember the first time I asked my dad, well, like, why can't we just buy toy companies before Christmas? Because that's when the earnings are going to be good, right? And then fortunately, he put me straight and said, well, that's because fourth quarter is expected to do well. Just because it's better than third quarter doesn't mean that, the stock's going to go up. It's all, the expectations game. So understanding that those type of concepts. But the way I would teach my son and what we've been talking about is kind of these scenarios and, if, what do we think is going to happen, but then add another condition, what could happen if that other condition is also true or false. So now when we're actually starting to invest with companies, my recommendation is to start companies that they've heard of, Nike, Disney, Roblox. That's going to make a heck of a lot more sense or appeal to them than the Pelotars of the world. And just for following, they can see the physical products or products that they use that their friends use. That's interesting. And my son is in a like a stock market. I guess I don't know if it's a competition or some type of thing through school. And everybody in the stocks that they're all owning are these kind of consumer brands that are very, heavy or popular with the teenage crowd. So meet them at their level and, find out which, think of through which are the best of those and, see what their interests are and that. Then you can actually, if you don't want to do that, you can also look at mutual funds and show how mutual funds might own those companies. It's always, it's interesting if you look up in a mutual fund, you can, I think they all show their top 30 holdings, at least if you go to them and you can see what stocks they're owning. Go with water here in a second. All right. So at this point, we're ready to actually, start trading. Now, one of the things that, and I think this is a really, really cool one. There's an app called Greenlight, and it's an allowance app that we use, and you get essentially a third of it, you can set it up, but a third of it goes to savings, a third of it goes to spending, and a third goes to charity. And we want to teach kind of the long-term planning, because otherwise a kid gets an allowance and the money starts burning a hole in their pockets. So kind of allocating how the funds have to be used is something you can do that. You can invest through that. And then there's also, because custodial accounts that you can have that you want to certainly be managing and looking at, what your kid is going to be selecting and how do you kind of allocate the money. How are you going to invest? Are you going to put all your money in one stock? Then you can have the conversations about diversification. Um, or or maybe it makes sense to you have a conversation, well, maybe we want to split those up and take our money and buy Nike, Disney, and Roblox instead of just all into Roblox because you like the video game. um Now there's also paper trading if you don't want to get into real money or the kid's not responsible or ready for it, or and there's certainly advantages. The advantage primarily is that it's not real money. In other words, there's no real loss. You can have larger paper trading accounts, which gives you more opportunities to make and buy sell decisions. If you're only investing a couple $100, um, on real money, it's hard to, are you going to have stop losses for, these for a $2, gain on a Nike stock or something like that. And, I don't know. But I think it certainly makes sense to teach kind of asset allocation and some of the trading decisions with, a paper trading account. But there are disadvantages. The psychology is not the same. I think it can lead to some gamification, which is not necessarily a good thing. There are advantages to gamification where you get stay interested in, um, and there's a competition, but you may be incentivized to take bigger risk. Um, so I think the ultimate best compromise to start is probably tie paper trading to real world results. In other words, if you follow the process, you reward the process, your kid does such and such, then you buy them the video game they want or the Lego set, or then you're not necessarily pulling money out of the market to buy the monetary reward, but you're providing that, you're kind of providing the reward for the kid, following the process, doing the research and doing that. Um, and this is kind of when you are starting to do the trading, and this is something that I think is crucial, is to start a trade journal. I personally use a site called TraderView, but you can use a spreadsheet, you can use OneNote, or various note-taking things. But you always want to write down the rationale for taking the position. But I'll go a little bit further. What did you expect to see? How do you know if the trade's working? Where would your exits be? What would you cause? Kind of committing to that process at the onset. Is crucial, because without documenting why you're taking the trade, you're not really learning from it. And frankly, I would say that, for any new trader, whether they're, my son at an eighth grade or a 28-year-old that wants to, trade for a living, you got to really study your own trades, see what's working, what you expect to working. But for kids, at least, I would start slow. I would start, with the weekly charts, wide stops, and just a few positions. If you're zooming in too tightly, you're going to get stopped out, or should be stopped out, and you want to make it more digestible or easy to manage. So weekly charts are great. I mean, if they were good enough for William O'Neill and how to make money in stocks, they're good enough for your kid. Um, so the thing that I've learned is, the power of gamification. Now, yes, it comes with a risk if it's all about the end results, where you could be unknowingly or unwittingly encouraging, too much risk. But it should be fun at the same time, and so you can tie it to some real world incentives, but also it needs to be following the process. There's nothing wrong with taking a losing trade if that's, if your hypothesis doesn't work. What's wrong is staying in a losing trade, right? So you can reward that as well. And you know, as parents, we can give real world incentives that are, you know, beyond the money that they might get from the trading stocks at this point. Also, now this is something we've talked about, just studying your winners, but I think also reviewing historical winners. And this is one of my, frankly, I think this is what gave me my best edge. And I would go through whatever the stocks, you know, that were the best stocks of that year or historically, and go through bar by bar where you would have bought it, where you would have sold it. I mean, just because, you know, a stock might go up 300% in a year doesn't mean if you had you were honest with yourself that you wouldn't have gotten stopped out during that process. You may have had to rebuy, but you know, you want to go through and be honest where you would have bought and why, and you want to keep a journal of that. So this is the trade journal lesson, and I don't know if you guys know who Kristen Kwamagi is. He took a five-figure account to nine figures, and he did a lot of it while streaming on Twitch. Him and I were both members of Stockbee around the same time. At that time, he was trading just a six-figure account at the time. But what was interesting about the interactions I've had with him on that, and I got to know him a little bit through chatting as people do, is that he shared parts of his trade journal. And what he had done is, and I thought I was working hard going through the process that I had, or going through every IPO, but he went through like every stock that had had a big breakout, or every stock that had, and he had detailed trade journals. It was extremely detailed. He had thousands and thousands and thousands of stocks on it, and he said he spent probably 10,000 hours on the studying process. And that's why he's become such a good trader, is because he had built up that core knowledge by just doing the relentless study. And so it was really, really cool to see. And then, then obviously he's taken it to a level that frankly no one, I would have thought was possible, but it was, just the type of stuff that, he was able to learn, and the trades that he was able to make because of doing his homework. So that's kind of the goal, to for studying, and that there are people that have put the time in, and have become very successful through the structured approach of studying. And so I think my favorite tool in the market is using a trade journal within, my takeaway, I guess, would be that is it provides a methodical approach to study, and that you can build and master. You're not going to get thousands of trades, as a 14-year-old, but you can study, a lot of charts and what the trades, could have been. I guess this is, maybe it doesn't need to be said, but trading, I think when you first start trading, you should be thinking a longer term approach. I don't want my son to start day trading. I want him to think more like an investor, focus on the fundamentals, learning like with the blue chip companies. And I kind of alluded this earlier in the talk, but I don't want trading to become a distraction. I want them to focus on the things that kids could be thinking about at this age. And there's also other strategies that work for that, such as dollar cost averaging, which I think is a great way to kind of see your wealth grow, even if it's the relative wealth of a 14-year-old, right? Okay, this is an issue that we've avoided because we have not been trading with real money at in this environment, but I know it's coming, and you're prepared for it. And this is a reminder even to myself that we all have losses. They're normal. I know we get proud of our picks, our trades, our decisions, but we need to expect losses. They're normal. They're part of the process. Even pros lose a lot. I've talked to a lot of traders with 40% win rates or even lower that are very, very successful. And so how do we relate that for our kids? you know, I think it's, think of it kind of like a video game. You're not going to win, you know, every level on the first try. You have to kind of stay focused and expect that, and, you know, stay in it. Don't panic. You know, it doesn't mean, you know, don't take it personally. I know there's so much about the psychology, you know, of trading, you know, because if you're on a streak, you know, you can do no wrong. You're on a losing streak, you can do no right. But, you know, it doesn't, you got to take a step back from it. Your own emotions can, you know, play tricks on you if you've had, you know, the recency bias or whatever. But, you know, these are the things that we just have to be prepared for. And be prepared to, you know, to teach your kids through that. You know, I mean, frankly, a loss is a great example of a teaching opportunity. You know, did it happen because the market, you know, just went against you? Was the pick bad? There's, you know, there's so many lessons you can learn from losses, sometimes more than your winners. Um, and I think the underscore of the point is you don't have to win every point to win. Um, and I saw this. It was a graduation speech that Roger Federer was talking about, and he said, "Look, I've won 80% of the singles matches I played in my career, but I've only won 54% of the points, right? So you don't have you could have a. I mean, his 80% win rate is, you know, incredible, but he's only winning slightly more than, you know, half the points, and it just, you know, it underscores the point that you can be wildly successful without, you know, being perfect. And so do we have a process for, you know, how are we going to deal with setbacks? You know, what is our process for dealing with it? How do we learn from it? You know, why did the trade fail? Was it a wrong pick? Was it at the wrong market? Was it at the wrong buy point? You know, if we are keeping a journal and reviewing our journal, rewriting what worked or what didn't, we can learn from that. If you're just moving on and you're immediately forgetting that, um, you're not going to learn anything from your loss, and you're bound to repeat it. Um, so then you have rules. I mean, obviously, when you're trading, you need to have a, you know, kind of a percentage of what you're willing to risk or when you're going to sell. And then you assess whether you followed those rules on your risk. So I think these kind of setbacks, you know, if you're prepared, you know, you're going to have losses. They're not going to hurt as little, and so you just, you know, kind of, it teaches perseverance. You know, to go through that, but, you know, recognize that with, you know, kids, you know, it can be sensitive, and they can be um, being really cognizant that a loss might break. You know, it can be really rough. I mean, I know I've made a ton of mistakes, and there's certain losses that I'm just so pissed at myself, right? And, you know, to expect our kids to be perfect and not have that you know, is unrealistic. So you have to be able to make sure that we're willing and able to, you know, to talk them through that process. And one of the ways I think you can do it is show your own failures. Now, here's one. We've got you know, a trade I did, and I like I said, I used TradingView, and which is great because it'll put your buys and sells, and you can look at them at different time frames. So this is a trade I did in AG, which is a silver stock. It had this big, you know, gap up, and I can see right now I bought it on that first bar of the day. Now this is not my trading setup. This is not my style. This is style drift, and I took a loss. You know, you know, so the bad on this. What did I do wrong? Is this? I traded down my setup. You know, I must have had FOMO. Um, you know, I'm going to participate because I think silver's going to do X, Y, and Z, but it didn't work. I guess if there's something I did, you know, so then you ask the question, well, was this a totally lost trade, or was there anything I did right? Well, at least I had you know, a stop in, and, you know, I took my medicine, rather than trying to ride it out. You know, I accepted that I was wrong. Okay. But, you know, the lessons that this wasn't my setup. I shouldn't be trading this. I know it. I know better. Um, you know, you know, it's showing your kids that you're not perfect either. And it happens. And then you can analyze your wins, which is, you know, a little bit more fun. I mean, here's a Roblox trade I did where you know, you can see I waited a couple days after the earnings gap, and that is my setup. You know, where it tested the gap, it held the gap, I started buying, and then, you know, goes more or less parabolic, going from 95 to up to 140 in, a couple days, and I'm selling out on that. And so, that there's lessons that can be learned from that. I mean, that's more of, following your process, and that there can be some, great rewards for following your process. So I guess the lesson I have is what I've learned is, you lead by example. It has to be about, you can make your own lessons for your kid relatable by sharing your own trades and your own, experiences, what you did right, what you did wrong. We're all learning. I mean, I learn something every day from the market. I by no means am I perfect, but I just try to be more right than I'm wrong. I think it's really important to celebrate wins. And I guess here's my suggestion is, upon hitting, certain goals or milestones, celebrate. I think you want to tie it somewhat to money, and not just, okay, we're going to go out for ice cream if you make, your stock goes up 10%. It's fine to, I think it's great for the parent to use the parent's money to reward the kid for that. Then, your kid's not pulling his money out. But I do think you want to teach them that, that there is money involved, and there is, somewhat of a reward. I think the risk is, if you don't celebrate the wins, or you keep your money in the account, the kids are just going to see investing as boring. If you're saying we're saving for school or savings or retirement, the kids are like, well, I'm not retiring for, another 50 years. I don't care. Or school, or, I don't care. It's college. I don't, they don't think that far ahead. But, if you think, there's a chance that they can make some money and buy whatever they've got their eye on, the new video game system or whatever, that may be, something that is worth celebrating when they hit their goal. And then, we're parting, so I think there's a lesson in that, we reward milestones, hitting the goals. And I think that, keeps your sons motivated and interested in the market. This one is more of the next one is kind of the cautionary thing. And I think, anytime with investing, you're naturally, to do the research, you're getting online, you're looking at things and as parents, maybe we don't have the ability to look at all the things that our kids are looking at online. And that's a scary thought. Obviously, there's horror stories, and stock scams are the least of it. There's a lot of bad stuff out there. But I want to make sure that my son is aware of what, kind of the traps are. And there's traps for investors. There's the chasing the quick money, the low float runners. They pump them up, and then they're gonna dump them on you as quick as possible. And being able to show your kid what that looks like and what these stocks look like, and why it's not a good thing, because it's very easy and to go on FinTwits or wherever else they're pumping them and saying, oh, my followers all made 400% on such and such stock. But you recognize that it got crushed just as quickly, after the 1 day pop. It's dangerous to just follow stock tips, whether message boards or people that are just trying to hype something up or selling services, and then there's just the outright scams, that are out there. So being able to teach your kids, all of those things is tremendously valuable, or something that's, I want to make sure that's, we make fun of, some of these people, online, and showing my son why how ludicrous they are, right? If it's too good to be true. And, you've got the people with their trader lifestyle, type thing, that are pumping that, with all their, hot tubs and luxury properties, or Lambos, and their, all the stuff. Just make sure the kids are, aware of that. And there's certain stages, stocks that, phrases that I hear, and I am immediately saying scam. Anytime somebody says it's the next Netflix, or it's the next Amazon, or whatever the hot stock is, I'm like, there's no way this stock is going to be a joke. So You appreciate that and tell the kids that, because they're very impressionable, but they want to get in on the ground level and get the big gain, but showing kind of what that actually looks like, and um, not just tell them that it's bad or don't look at it, kind of explain, kind of understand what and how they may be influenced by that type of thing. And obviously there's the people that are just trying to, join the service and hustle hard. And these are the ones that have been coming up lately in everyone's Twitter feeds, is where anybody posts it, that you'll get replies, to that type of thing, and reach out to Miss Beverly, Chloe Beverly or whatever they're trying to scam. But so being aware and show your kids what this actually looks like, is important. So I've got a few resources that I recommend, or that I've looked through. I think there's the investment guide for teens, which what I like about this one is it's written for teens. It doesn't treat them like they're babies or anything like that. And I remember when I was learning to first get involved in the market, I remember The Motley Fools. There were some of the first books that I read, and I thought they did a nice job of kind of explaining those concepts. They'll take them through, from everything from like interest rates to bonds and investments and dividends and all this stuff, just to give kind of a little bit of groundwork, and how to have those discussions with your kids, and how to maybe explain some of that type of stuff. I thought those were the other book, Blue Chip Kids, pretty similar, but it's the things what kids should know about money and type of things. Websites, John's got a website here called the Ranking Insights, and he wanted me to point out that he's got a kind of a beginner's course, and it's a great resource to check out. Getting and then it builds on that, and there's different kind of levels. Once you get more experience, you can buy the next course, and kind of educate yourself, and it's a great way that you get some kind of more advanced knowledge and stuff. But I recommend that. Teen Investor, it's there's like courses that are made specifically for teenagers on investing. I think they've got some crypto stuff, but that kind of also scares me a little bit. But I think crypto's really hot for kids. It's mostly, I'm not a crypto guy, but people younger than me are real into that, and they talk about it at the middle school quite a bit. So be aware of that, and that Teen Investor is a great choice if you're looking at getting a little bit of exposure, and hopefully in a responsible way, as opposed to the meme coins that are coming out. And then Investopia has some stuff as well. I mentioned, the stock market game. That's, some of the schools have that, but you can join that even without being part of a school program. Greenlight is the allowance app that my kids are on. It's really cool, and they've got like an app. They can get a credit card, and then they can feel responsible, like that it actually is their money. That we're not just saying, "Oh, here's my allowance," and they can look at how much they have. They can invest right on that app. So that's something that's really, really cool. And I guess my ultimate lesson, of teaching my son to trade, is how fun it is, and is sharing the knowledge that is, my passion, with my son, and being able to share that, and having that bond, being able to sit, over looking at some charts. I remember when he was, like a real small kid, we looking at a chart and said, here's what's going up, and everyone's like, oh, they're rich, they're rich, they're rich. And then, then my son was out and see that it crashed afterwards. Maybe it's like MicroStrategies or something, right? And then, like, I'm poor, I lost all my money. And he thought it was the funniest thing. And so he'd look at charts, and he's saying, I'm rich, I'm rich, I'm rich. And then I've lost all my money. And he thought it was the funniest thing. And, but it's been a really cool, to be able to bond over, at least this has been a passion of mine. Hopefully it becomes a passion of his, or at least he has a general I guess, like of it, you know, and a baseline knowledge that, you know, if he doesn't want to become a trader, and I'm not sure that I would ever want, you know, somebody to become a trader, or my son to be a trader, because it is a hard road, but having that appreciation for it, and, you know, being financially savvy, and being able to invest, because it's so important, whether you're a trader, investor, or whatever, how you participate in the market, to be able to understand how money is used as a tool and how to build from it. So I guess I can open it up for, you know, questions, ideas, or other experiences that, you know, other people may have had.
Yeah, Scott, it's just a really, really, really well thought out presentation.
Well,
Really
thank you.
appreciate you sharing all that. I think, you know, what's impressive, I think, is your commitment to educate and spend time with your child. That's really incredibly powerful. And I think, you know, you as a trader, investor, it's probably one of the best investments you will ever make, regardless if your son, you know, trades stocks ever, or if he
Yeah.
doesn't. He's going to get the biggest benefit is he's going to get the memories of spending time with you, and it just comes through that, you know, you're building just a really great positive relationship with your son, which is just tremendous.
Yeah, 100%. It's been very, very enjoyable. You know, and some of the questions that he comes up with, um, or well, his insights, you know, if we ask, you know, we talk about various, you know, what do you think would happen if, or why do you think this is happening, and the like. So it's just been really, really rewarding.
So yeah, if anybody has a question you want to put in the chat or in the Q&A, after we take a look here. Here's a question for you, Scott. What broker do you use for a custodial account? I know Charles Schwab does not allow for minor access to their custodial accounts.
Sure, you know, and I went down that road. You know, at first I thought Robinhood would be fun, but they don't have custodial accounts either. Interactive Brokers does, which is I use that personally, so that's been the real easy one for us. Um, but you know, there's a lot. I guess that's I don't know it other than Interactive Brokers, because that's just what, you know, I've used and now we use. Um, but I know that there are a lot others. Unfortunately, you know, I thought Robinhood would have it, because I think there's somewhat. It seems like that app is more catered towards the younger kids. You know, I mean, they get the fireworks and stuff, or whatever, the confetti when they buy a stock and stuff. So I thought that could be fun, but but we'll keep. I mean, Interactive Brokers is. I mean, if you use it, it's very sophisticated, and some of the stuff that you can do with it at the high end. Um, I think the drawbacks, you know, at the high end at least, are there's almost too many features. I mean, I can trade, you know, commodities, futures, foreign stocks, spread strategy. I mean, it's remarkable what's out there. But you know, for teaching a kid, you don't need all the bells and whistles.
If anybody would like to ask a question, you know, live, raise your hand and I'll let you open your mic and you can ask your question. Hasib, you want to go ahead? Let me see.
Hey Scott, how you going?
Hi, Steve. How are you?
Good, thank you. I follow your stuff on Twitter, man. I really like your simplicity of styles that you trade and stuff like that. And
Thank
I
you.
just wanted to know, like, when you transition to kind of go from working from Chicago Board of Traders and went on your own journey, sort of thing, how long was that transition taking you sort of to make your own strategy work at your own pace? And what was your roadblocks? Because I'm kind of like in a similar situation where I've joined Stockbee. I've literally worked at a coffee shop, and now like I'm going into this.
Yeah,
So
and you're going into it in this market too, but right? Um,
yeah,
yeah. So yeah, I mean there was this wilderness, and I was working in obviously another job when I was started that, and I didn't have a clear, I went down so many misdirections. I read Jim Rogers and you learn about the commodities and, that
yeah.
United States is going to collapse. So we should all be in all that kind of stuff and stuff. So it was probably at least a 3 or 4 year journey before I was consistently profitable. And then once you find the profitability, then you scale on top of it. So that made a lot of difference. But, um, I guess I think Twitter is so much better now at the FinTwits and what's out there. I mean,
Yeah.
I was going off so many wrong turns. But then once you kind of can narrow in and you find what's working, you can just zoom in on that um, and that's kind of what I've been able to do.
Mhm.
Did that answer your question?
Yeah, yeah, for sure, man. Because I'm just like, day in, day out, I'm putting in the hours and the work, and then I'm just constantly telling myself that it's gonna pay off, it's gonna pay off, like keep at it because it's very
Yeah.
demotivating when you've got them like obviously the market's chopping around and whatnot, and
Yeah.
just like you're keeping at it. But um, yeah, so just wanted to see what other people are going through and how long it took them and stuff like that.
Sure. Yeah, I mean, you got to preserve your mental capital as well as your capital in these type of environments, right? I mean,
Yeah.
I've cut back on the trading or position sizing lately. I in 2022, I went out of the market for a long period. I took a lot of cash out of the market and took a vacation. That's the greatest thing, the advantages that we have over, the professional money managers. They have to be in the market. We don't.
Mhm.
Pick your spots. And if you do that, you've got a system and you exploit it when the times are good, you'll be successful.
Yeah, for sure. Sure. Thank you. Thank you.
No, you're very welcome.
It's actually one of the things about trading, when you're trying to teach somebody or at least help them with their path, you know, it's kind of easy to train somebody and say, here's a setup and here's how you set stops and here's how you manage risk.
Yeah,
But one of the couple of the qualities, that are really important are patience and discipline. And, everybody kind of nods their head and said, oh, yeah, I'll be patient and, I'll be real disciplined. And, you get into a market that's not cooperating, the environment just is not good and people can't help themselves. They want to keep trading and they just get cut up. And, patience and discipline are so important to really just recognizing, what type of environment are you in? Because, you can have the greatest setups in the world, but if the market is generally in a
yeah.
downtrend, it's going to be tough.
Isn't it funny, John, how all the setups always work in the textbooks?
All the perfect examples.
Yeah. But in reality, I mean, that's the reality. That was the difference that I learned. I'm like, well, this is a great pennant at the end to drops
Yeah,
at the bottom, right?
right,
They
exactly.
they don't show you the thousands of times that they don't work in a bear market.
Right, right, right. I got a couple of questions here on the Q&A. Here's one. How do you get the
Sure.
sign that your kid's investment journal is going in the inappropriate way, and how to convince the kids to change that direction?
Well, I think you can try to lead the kid to their own conclusion. And I love the Socratic method, right? You ask the questions. And I guess maybe I don't understand the question of what do you mean by the wrong direction. I think one, if they're actually following the journal and they're actually, writing it all down, I think that is the right direction. So the wrong direction would be not having the journal, right? And if you have, the question, or if you've written or if you're looking at the journal and I mean, you can see it's a bad trade, but you ask the question, then you can use that as a learning opportunity. Even if you made money, I'm like, well, where could you enter this to make it better? What would have given the signal? along those times. And you're not, if you just see the win, you might not necessarily realize that you could have had, another 10% by entering a little bit lower, or you would have had another signal. So having the journal and be able to ask yourself those questions. And, frankly, that's something that I've done over the last couple of years, very, in detail with my own trades. With TradingView, I've got my, I don't know, I'm taking it back to 2012 or whatever, of all the trades. But I was realizing by going through a lot of long extended periods, I could find periods of consolidation that were not necessarily as apparent on the chart, and get tighter entries, which enabled me to manage my risk a lot better. But I think kind of the same process. You don't want to just shut down the process and say, no, this is a bad trade. Just ask the questions in kind of that Socratic format. But you just having the data point, when they're ready, they'll be able to look at and learn from that trade.
Yeah, that's good stuff. Here's another question that came in. Very good presentation. I'm watching this with my 19-year-old daughter. We have reviewed SMAs and EMAs and a few oscillators. She says, Dad, what are you talking about? This is not fully what you've taught me. You always said buy high quality companies during pullbacks and go back to nursing stuff. Any thoughts?
Yeah, I'm a pullback buyer as well. I've got this setup called what I call the slingshot, and essentially what that is it's a set up in a growth stock that's moved up, and then it pulls, and then it goes over a 4 EMA. So and the key distinction is it's the 4 EMA of the highs. And the distinction is when it hits, you take back the EMA of the highs, you're going over you get the change in momentum, because it has to take out the last 4 days of the average of the last 4 days, meaning that it's reversing that downtrend. So I've had great success with that moving of growth stocks and on pullbacks. The question is, well, how are you going to define it? I don't know that an EMA or any I think you have to remember they're all imaginary lines on the chart. But if you look, find price support at those same levels, and know where you're going to get in and out. I mean, buying a stock just because that's coming in hot and fast on a moving average, I don't care if it's a 50 moving average or the 20 or the 200. If it's coming in hard and fast, it's going to slice right through it more often than not, unless there's some price support. So, I certainly agree with that. Buy the quality companies during pullbacks, but you want to make sure that pullback is coming out of it. And that's what my approach has been is, okay, how do we define what the end of a pullback is? And and I guess on the previous question, a lot of what I've done to find my own edge was study that and ask those questions. How do I know when a pullback's over? Where's a safer spot to buy a stock? That type of thing, and then going through that process. So
I've got a few others here. Let's see. Tyler asks a question. On a side note from your presentation, I wanted to see if you could touch on trading using R multiples. I noticed that's something you'll include along some of your trades that you post on X. After having given back more than I'd like to in the past month, I'm trying to focus and strategize more using R multiples and R compounding in my portfolio. Is this too far outside the scope of tonight's discussion? Then no worries.
Yeah, I mean, if we get time, I guess my thought is with the R multiples, and I'm not an engineer. I know when engineers ask me questions because they're very systematic. But what I look at it when I use R, I want to make sure there's enough meat on the bones of a trade, right? If you take a percentage, well, here's my stop, and I can see there's 3-4 R, then that probably justifies the trade. And so that's kind of how I'm doing it, but I'm not like back testing and saying this is we're gonna plug this in the system, and these are all 4 or 5, or I'm not going to take the trade. But I'm looking, kind of assessing that. But I'm always, and if you've seen, I've got a lot of lines on my charts. Those are always at like where I consider congestion points. And so that's where I'm, finding the upside, particularly in a chop market. You need to be selling, some, if not all, into these, pivots to make, progress. Buy off the lower pivots, if there's enough, as it comes out of the congestion, stop at the underside of congestion. Is there enough, risk to reward, I guess your R value, to the next, congestion point on the upside. So that's kind of how I'm using them.
Yep, that's good. Here's another question from Penita. I've been through the day gambling trading myself. Are you afraid your kid will go through that phase?
Yeah, I think I said, there's always a concern they're going to head, turn your kid to the keys to a gambling addiction, and that's why, that's out there. And I don't know that there's probably a trader that's ever traded that hasn't, at least tried to dabble in some of the, like some of the stocks that they probably know they shouldn't be, right? I've certainly have done it. But I think that, the key is you have to build a foundation. And if you are doing the journaling, then you can certainly, you'll teach yourself that you're trading the wrong stocks, eventually. You might get lucky, once, twice, three times, four times in a row even, but eventually you're going to get burned on one of those stocks, and then you swear yourself off of them, right? I don't know. Is it a risk? Well, I think, anybody that's ever traded in the market is, it's probably is a risk for.
Yeah, it's really interesting. All trading involves, you have to be able to take some degree of risk. And, everybody's on a different place on the spectrum. And when you do your post analysis, sometimes you find that, you say, wow, I am really way out on the risk spectrum. I'm taking big risks, wide stops. And you learn to say, okay, I might need to dial that back a little bit. But at the same time, if you're trading out of, fear, and you're just so risk averse that you never really, you choke off trades and you just don't let them work, that's a problem as well. And there's ways to try and say, well, how do I, build more risk tolerance into my trading to grow as a trader?
Yeah, and just because it might be a gambling trade for you, it doesn't mean it is for somebody else. I mean, there's people that have, great systems built around probably low float stocks, and there's a lot of really great traders that trade the short side of those, day trading or whatever. But that's not my style. So it's really, more gambling when it doesn't fit into your system, because then you don't have an edge. I mean, that's, what I would call you know, I guess gambling is when you don't have an edge in a trade. So that's so important to talk about what your edges are and how do you come up with those edges.
Right. That's actually a perfect lead into the next question from Stephanie. She says, what about if your kid equates investing with gambling?
That's funny. I mean, it's in some sense it is, right? We're always betting that there's going to be something, that the financials are right. I mean, I've lived through Enron where it was supposed a blue chip company, but the books were cooked, right? So there's always an element of risk, but is it gambling? I think you have to understand what the edge is, or if you have an edge in how you're going to manage that risk. I mean, you can be a poker player and be a tremendously successful at it if if you have an edge. It's a skill, right? But if somebody that doesn't, you're just throwing money or chips on the table. So is it an equation? And I guess I've conceptually struggled with this question, for a long time. In some sense, I do feel like, we're gamblers and maybe we just embrace that. But life has risk, trading has risk. But we can wrap it up and say we're, traders or speculators or have a system, but who knows? A bomb could go off, and I lived through September 11th. I remember what the markets did. It destroys so there's always this, these black swan events, but you just have to proceed through them and manage that risk as best as you can.
Yeah, and I think you're right. I mean, as traders, all you can do is really try to frame the trade. Where are you entering? Where's your pivot point? Know where you're going to get out before you get in, to say, is it a reasonable stop? Is it a reasonable stop within the, true range of the stock? Is it, on the chart, does it make sense? The volatility of the stock,
But then
and
they pre-announce, yeah, then they pre-announce earnings and your stock goes out the window, right?
It's one of those situations where you try to frame the trade and you try to do your best to say, I'm going to try and control my risk. This is my target. This is my risk multiple, et cetera. And that's the best you can do.
Right.
Does it prevent you from having a gap down and you take a much bigger loss than you thought? No, it doesn't. But that's part of being in the market. So all you can do is try to plan ahead and have a really solid plan, and then you have to let it play out.
Yeah, I mean, nobody ever complains when you get the much bigger gain than you thought you were going to get.
That gap up.
Yeah, those are fun, right?
So here's a question from Tyler. Does the Boston meetup ever do events in person? We always used to do events in person up until COVID. We used to meet over at a classroom over at MIT, and we would have our monthly meetings in a lecture hall over there. COVID hit. We went to Zoom, and the nice part about it is the Boston meetup got exposed to people from around the world, and we have people all over the world attending our meetups now. MIT, even after COVID, would not open up exterior groups to come back on the campus to share their rooms with us anymore. So that was a problem. So we've continued to do things virtually right now. And that's where we are. Okay, that's all of the questions. We seem to have gotten through the Q&A. I don't see anything else relative to the some good chat stuff there, good questions, and just really an excellent presentation. As I mentioned, we'll get the recording out to everyone that registered. I'll get it out tomorrow. I want to thank Scott for just an awesome topic, really helpful to a lot of people. Again, we always talk about, trade setups and indicators, but this is related and it's just really great stuff. I encourage you to actually check out, Scott Land's Substack. It's good stuff. And you can kind of continue the journey that he's taking with his son if it's something that interests you. So thanks again, Scott.
Yeah, absolutely. Thank you so much for having me. This is a lot of fun.
All right. Thanks, everybody. We'll see you all next month, which will be April 8th, and we'll have Matt Caruso. So we'll get the notice out and I'll post it on X. And thanks again to Scott. Thanks for everybody for joining tonight. Good night.
Good night. All right. Thank you.